Hello everyone and welcome back to the Coreco Couch. Now I know what you're wondering, who is sitting on the couch with me this time? Well, I'm delighted to say we have a very special guest. Actually, all our guests are special.
You were going to say that to everyone, weren't you?
Do you know what? I have said that to everyone. But nonetheless, you are still very special. It's the lovely and rather brilliant Charlotte Harrison, who is the CEO of home financing for Skipton Building Society, where she's been there for over 10 years. Welcome, Charlotte.
Ooh,
is that right?
Yeah, but that's aging me.
That's not aging. I mean, look, I was going to say you must have started in your like early teens.
When I was 12.
When you were 12, yeah, definitely. Definitely. Well, welcome to the Coreco Couch.
Thank you very much for having me.
And thank you for walking up loads of stairs to get here.
Just 3 flights, it's
and
okay.
my bad directions. But we got here eventually.
We did.
And we're here. So, over the past 10 years...
Yeah.
Sorry, I've mentioned it again. You've done many things at Skipton.
I have.
Financial analyst, business partner manager, head of products, general dog's body. You said to me earlier. Brewmaker.
Yes.
That's a very important role.
Yeah. Washer-upper.
Washer-upper.
Dishwasher stacker.
Oh, right. Okay.
Yeah.
So you literally done everything. But now CEO, home financing. Do you want to tell us what that role involves and what do you do, Charlotte?
Somebody asked me this the other day and I said, well, I don't really know. It's quite varied. Just anything relating to mortgages and giving people money to buy a house. But yeah, I'm responsible for looking after everything that is end-to-end home lending journey from a customer's perspective and broker's perspective. So that's product and proposition, our sales channels, whether that's direct or through broker partners, underwriting, completion, servicing, pretty much the full shebang.
So it sounds like you basically run the show then.
Well, I just get to be the face, really. It's everybody else doing all the hard work and graft that really run the show. I probably get in the way more than anything.
No, don't believe that at all. So I've been up to Skipton and your lovely place, and what an amazing place it is.
It's
and how friendly is everyone, by the way?
Yes.
I forget how friendly everyone is.
I think it's supposed to be one of the nicest places to live in the UK, apparently.
Yeah, it's lovely. And everyone treated me really well. So thank you, everyone, at Skipton, if you're watching. No, I really, really enjoyed that. So what was your journey then to get to where you are today and now, you know, taking a starring role on things like BBC 5 Live, radio and...
Well, I think, do you know what? When we talk to people in financial services, I think quite a lot of people say, well, it's not really what I kind of set out to do. I just ended up there and stayed and have never looked back. But so I got a job in, it was actually part of our group company. So when I first left school, I realised I needed to get a job, needed to pay some bills. I didn't go to university, and I started out at what was home loan management back in the day.
Right. Oh, yes, I remember that.
Yeah, and I was a deeds consultant.
A deeds consultant.
Yes,
right. Okay.
Very grand. Deeds consultant, and just did a number of roles in the company as was then. And then probably after a few years decided that I probably needed to get a little bit more serious about what I was doing. So I got a great opportunity and did my accountancy qualifications. And I think really I'm probably a bit of a bean counter and I do love numbers, but more of the commercial side of things. So when I joined Skipton, having worked in the finance department, I was really eager to get across into the commercial teams. And so I got to see kind of the fun that the products team were doing in creating some new wacky ideas and product solutions and driving the business forwards, and I joined there. And then a couple of years ago we got a new group CEO, joined the society, and his lens on the world was well, from a customer's point of view, nobody really wants to say building society. I think these are his terms actually. Building society, you know, they want you to help them make the money work for them. or they want you
Makes
to help
sense.
them get onto the property ladder and have a home.
Yeah.
And so we restructured the company in that fashion. So how do we help our savings customers make their money work harder for them, and how do we help customers that are aspiring to get onto the property ladder or are on the property ladder and looking to do something different? How do we help those? And so CEO Home Financing and CEO Money was born. And I was very fortunate to be able to be asked to look after CEO Home Financing position whilst we settle things down. And then I'm there permanently now. They
Yeah.
can't get rid of me.
You did well, obviously.
I must have done something right. I'll take
You've
that.
done more
but-
than something.
Well, I don't know.
Yeah, and you're a great advert, by the way, for young women who are looking at the finance industry and wondering, actually, is it for them? 'Cause
Yes.
it's not. It still has that shadow of maybe being a bit too male dominated, but you're living proof that.
Yeah, I think, do you know what? A few people have said that. And when you reflect on that, to think, well, what is it? I then put myself back into a position which is, had I not been asked to, I'm going to say, babysit the role whilst we structured our teams and departments as we needed to, but would I have ever applied for the position?
Yeah, it's interesting.
Probably not. Yeah, probably not. I would have been quite self-limiting, and you know, and because if I looked at the rest of the executive committee as was at that point in time, I didn't look like any of them.
Yeah.
So, and that's, I mean, we talk about this a lot in the industry and generally, don't we? But that's why kind of diversity across, all range is so important, because
100%.
otherwise it's like, well, oh no, I must look like this cardboard
Yeah.
cutout to do that, and I don't meet that criteria, so I'm not going to put myself forward. So yeah, that's not what I was aspiring to be, but
No, I know,
but it is important that you have somebody that you can look at and think, oh yeah, I look a bit like
Yeah.
you, and you can do something, so
Yeah.
why can't I?
Yeah.
Yeah.
And you're so down to earth. and northern in a good way.
Very northern.
I'm half northern, so it's okay. I can say that.
Yeah.
No, it's brilliant. And so Skipton Building Society. I know some people watching, they might not really be sure what's the difference between a building society and a bank. So how do you act differently?
That's made me smile, because my husband was asking me that the other day randomly.
Oh, really?
What is the difference between a bank and a building society? I've only worked there for 10 years, but yeah, finally taking some interest. I know, honestly. I mean, the most basic terms are, as a building society, we are owned by our members.
Yeah.
So it's at a kind of core foundation. We don't have shareholders, investors, etc., to pay a return to and be responsive to. We're owned by our members. So our savings customers or members and mortgage members own us, and that's who we have a duty of care to. And I think therefore, and with that, there then becomes some differences in terms of how you access your funding, how much you do through retail deposit growth versus going to kind of the wholesale markets. And I think I'm fair in saying this also, because you are owned by your members, and therefore potentially, we should have somebody on to challenge me back on this.
Yeah.
But less wedded to kind of in quarter cycles of what's the share price doing, what are the results.
Yeah.
Perhaps afforded to take a bit more of a medium-term position on some of our investment choices. So I think therefore you can invest over the longer term to pay back dividend for your future members.
Yeah, that makes sense. And it's the building society sector for us as mortgage brokers is so valuable, because you tend to be able to do slightly different things, innovate a little bit more.
Yes.
And
and also, and if you think about certainly from an innovation perspective, there are opportunities and there's a benefit with having size and scale, which some of the banks and the larger institutions have. And then where you've got kind of more smaller economies, actually you can be a bit more fleet of foot, and you can be nimble, and therefore you can innovate because it's worth it, and there's opportunity that it'll provide.
No, it's really interesting. And obviously part of that is around, you mentioned, your side of the fence in terms of helping people buy their homes. And I know Skipton are really into first-time buyers and trying to help. So there are two main aspects of first-time buyers getting on the property. One is affordability, which I'll come to in a minute, because I know you've done some great work there. But the other is saving for a deposit.
Yeah.
And I know one of the things you did, you came out with your track record mortgage.
Yes.
Which is 100% loan to value. So yes, you don't need a deposit, no deposit. Do you want to talk us through how that came into being? And actually, it'll be interesting to know how it's done and what findings you've taken from it.
Yeah, absolutely. So you're absolutely right. If you speak to any aspiring first time buyer, what are the biggest challenges? Affordability and access to a deposit. And especially if you don't have access to Bank of Mum and Dad or Bank of whoever that's going to support you. And track record came about because we were thinking, what problems can we solve? So what are the challenges in the market? What are the needs of customers that aren't our customers today that we want to be customers in the future? And like we said, deposit came up. And the original, so some of the original thinking was, well, everything goes in 5% increments. So we start at 50, maybe 60% typically loan to value products. And then we just go up either in 10s or in 5% increments. Yeah. And that's been the case for decades and decades.
Well, forever.
Well, forever.
Yeah.
So that's not changed. Yet house prices have changed. Wages have changed. Types of employment. There's a lot of change in the background. So really, I'm going to make the numbers up, but if I had to save up, 40 grand so many years ago, and that was seen as a good thing for a deposit, but house prices have grown in excess of wage inflation, why is 40k not still acceptable now? So that was some of the start of the thinking, which is, well, what would be wrong with a 3% or a 2% or a 1% mortgage? And then obviously you see it everywhere in terms of social media and people saying, I can afford to pay rent and yet my rent's higher than my mortgage payment,
that's right.
But I can't get on the property ladder. But how can I save if I have to rent because of blah, blah, blah circumstances? And so then we started thinking about, well, that's exactly the right point. So how could we design something that protects the interests of the customer and the lender from a risk perspective, but where we can get rid of this blocker, which is tens and tens of thousands of pounds of a deposit when you're renting. And so hence track record, if you can show that your rental payments meet your monthly mortgage payment or typically more, then we want to come and talk to you. And
how's it gone as a product? Have you attracted the right type of people?
Yes, oh, absolutely. So I think when we first launched to market, I think it was 9th of May 2023, it's imprinted in my memory. We understandably didn't know because there was nothing on the market as a comparison. So we went with, I think it's fair to say, tight lending controls, as you'd expect. And we've been able to expand that, and we've been able to listen to feedback around criteria, etc. We've expanded onto like new build flats, etc., things like that. So I've been really, really, really pleased with the level of take up and interest. And also what we found is for people that believe that they were kind of locked out of home buying and there wasn't an option for them on the market, we also saw a knock-on impact that it might not have been the track record as a product, but what other solutions are out there? Because it might not be that I need, but we rebranded our income booster product as well. Yeah. There's other things that can help people get onto the property ladder. So there's been an added benefit there, which we hadn't really probably thought of beforehand, but it's been really, really pleasing. And the feedback that we get from customers and people is just phenomenal, which is, you've helped me when no one else would. No one else would, yeah. I've now got keys to my own home. I've now got safety and security. I can, do what I want. This is my safe haven. Yeah. And I didn't think that was a possibility before. So. And they know what their payments are going to be rather than at the whim of, rents and landlords who, because the way the world's going, have sort of had to put rents up, of course. Really. There's just something around having that kind of, your home is your safe haven, really, isn't it? And then when you've got the security around that, it's like, well, if I don't have to worry about that, can worry about other things in life. But So the other thing is affordability. Now, handily here, look, we've done something about that.
I know. Sorry, look, it's a bit You can tell I've read it though.
Well, that's a sign of love. That's
That's
been well thumbed through.
Well thumbed through. So yeah, home of your own. So this is a Skipton Group Home Affordability Index, which I thought was really interesting.
Good, I'm pleased.
Around and slightly depressing actually. And it breaks it down into areas.
Yes.
So you can go online and have a look at this and see what the affordability level is like in your area. What were sort of the findings that you found out of this? Did anything shock you, or was it?
Yeah, quite a lot. So some of it is some of them were state the obvious almost, which is we've concentrated. So we've done 2 iterations now of our affordability index. So we're publishing the results every 6 months. And we've chosen to kind of deep dive in onto first-time buyers because, state the obvious, that's where it's hardest in terms of stretched affordability. But in the second iteration, we were able to break the data down across 363 different local authority areas. And when we say, what's the least affordable area? Where might we have supposed to have thought, London area, southeast? No, Wales.
Yeah,
so
that was really interesting.
Yeah. So Ceredigion in Wales is the least affordable area.
Where was that again? I thought you said that really well, but
Practiced.
I don't know. I'm not very good at Welsh. Apologies to any Welsh people watching.
Apologies for that. So insights like that, absolutely fascinating. So we looked at where are the most affordable areas in the UK, where are the least affordable areas. We've been able to look at not only what do we see today, but based on the data, what do we believe will be true in a couple of years' time? Yeah. So as an example, and one of the things we've used this for is a call to action for government on policy change. So we know we've had, sadly, the stamp duty changes that came into effect 1st of April. And that, for the average first-time buyer property, quadrupled those that would now be caught under stamp duty changes.
Wow.
So it went from something like 8.2%, I think, not quoting because I've not got it there in front of me, to 32% overnight.
It's not a test. I'm not going to look it up and test it.
So I'm there or thereabouts.
You're there or thereabouts.
But so fascinating insights in terms of the affordability. And I think one of the things I like about this, and obviously I should because it's our report, but I genuinely find hopefully will be useful for people is we talk about, there's a lot of indices in the market which talk about house prices, and we are a nation of loving, aspiring homeowners. So we're all interested in property. We're all interested in home ownership, and so you're understandably interested in house price movements and what's the value of your asset, etc. But that's kind of one lens. I think it's really interesting that we're also then saying, and what does the affordability, like the living element of that look like? Because it's not just the asset price, the purchase price, but when you think about rents, average incomes, essential housing costs, etc., removals, all of that's combined into buying and then living in a home, it paints it's a broader picture on what is really changing. And when you said it's a bit, some of it's a bit depressing or a bit of a stark in terms of a read, it is because it's not changing. Yeah. So it's not getting better, and it's not looking like it will get better unless we do something about it. Yeah. And that's the thing.
So what do you think we should be doing about it? What can lenders do on one hand, and then actually what do we need government to do on the other? So
I'll start with the second point, which is one of the things that we'd asked for is less yo-yoing on the transaction tax that is stamp duty. So if you think about
I agree with
people that weren't able to complete on time for the 31st of March, all of a sudden I might have an extra 6k to find. And that's not helpful when we know that it's not a quick fix, is it, buying your own home? So if you think you've got to save on average 7 and 8 years, I think the statistics are, having to then find X again is unhelpful. And I also would like to see that on the downside element as well. So there's no incentive for people that are in properties that they perhaps don't need and or want. There's no incentive for downsizers either.
So the last time, so those people who are older, kids have left home and they're still
and it's going to cost
in
them a
5-bed
fortune to
house.
move. Well,
yeah, I understand that.
So we'd like to have a look at that. We've also asked for a review of the lifetime ISA rules.
Mm-hmm.
So less so from a lending perspective, but for those that are looking to save and are able to save for a deposit, those rules haven't really been changed since. Well, they haven't changed since the product was launched in 2017.
No, not at all.
I still think it's a really good product. It's helped over 250,000 first-time buyers get onto the property ladder. But the penalty for withdrawing needs to be reviewed, and the purchase price needs a review as well, because people are being caught by that now, and they've been saving hard-earned cash into that product, and now they're a bit squeezed.
So there's limits, isn't there, and the property value.
So that needs to change. We know that we need more houses generally, and so we know that. I mean, it's on the government agenda in terms of planning reform and what we can do, but massive focus on building homes we need and affordable homes.
Yeah.
And I also think, and we are seeing more movements for this, but what is constraining lenders' ability to lend more now? So we've talked about the loan to income flow limit. Mm-hmm. So at the moment, a hard rule around more than 4.5 times income. We'd want to have a review of that. So it encourages lenders to be able to lend more where it's affordable, always where it's affordable. Yeah. And anything else in that kind of guise. From a lender's point, I think, do you know what? I think we have seen some innovation in the last couple of years.
We have started to. Yeah, there's yourselves, there's a couple of other lenders who have come out and done that.
But we just need to see that continued innovation, because...
Do you think that's regulation that's constraining other lenders? Or, because if you look at the risk in the system, so arrears are at a real low level. They have been for ages. So I'd argue actually that shows that there's not enough risk. Now, before everyone shouts and writes in, I'm not asking for a return to pre-2008 days. No one's asking for self-cert or anything like that, but just some sensible risk, as you said, where it's affordable.
I do. I'm smiling there because it's a question we would never answer, but what's the right level of arrears?
Yes, well,
because and also, and what are the reasons for people having some form of blip? Yeah, because
it's usually a life event.
Isn't it? Yeah. So you can be excused for. I'm not saying the customer can be. I mean, but you don't want to cut off lending to not help people. Correct. For life events, one-off circumstances, because if you think a mortgage is like 30 years, as long as you're not putting somebody into a worse position, so consumer duty, avoiding foreseeable harm, then that's the lens you almost have to run. But you don't want crazy lending that's going to...
No one's asking for that.
No. I think a risk appetite is an important factor. And I think continued innovation is needed in the market. And I think, when we did launch the track record mortgage, we knew it was a good product. We believed it was a good product. We knew that we'd got good levels of controls around that, because absolutely I did not want to be putting anybody in positions where they were then trapped. They were in a worse position than they, So I always think, would I sell it to my sister? And if the answer's yes, then that's good to me. And that's how we felt coming to market. But understandably, you were putting your head a bit above the parapet, saying no one else is doing this, and we believe in it. We think it's good, so that's why we launched it. But I think you start to see more lenders now come to market as well with other kind of product solutions. It's funny
that, isn't it? Because everyone says we want innovation, we want something different, and then you do something different, and everyone says you can't do that. Or not everyone, but lots of people will then criticise that. Here we go again. It's return to the...
It's driving up house prices.
Yeah.
I don't think it has. I think we're okay. And because they're not all mass market, are they?
No, not at all.
So, I think there's a level of pragmatism to wrap around it.
And so do you think we can all come together finally to actually solve the issues in the housing market? And that's lenders, brokers, consumer groups, government, etc.
I think we have to.
I think
do we
we
not?
have to, yeah.
I think we have to find solutions. I don't think there is one solution. So I don't think there's kind of, we'll get everybody together. It's a silver bullet, and we've solved everything, because needs are different depending on individual circumstances, etc. But I feel like there is no downside to collaboration.
Yeah.
Is my view.
Yeah. I'd love to see, I know this will never happen. Well, it might happen, you never know. And I spoke about this at your launch, actually, to a couple of people, is we need to see, you actually want to see a cross-party, you almost want housing taken out of the political tennis match and short-termism.
Yes.
So you almost need, this is right, we're going to have a 10, 15, 20-year housing plan. It's going to be cross-party support, run by a property czar who's got experience in the property market, professional, and then housing ministers, when they do come in, their fixed tenure for the parliament.
Not just.
And then potentially, if you got that, you could start to see something change.
You're right, though. It is about, we need, I mean, it's not just housing, is it? But we need to be able to take a longer term view on a lot of policies. And that's one of the challenges, because you get the kind of flip-flopping.
We're so stuck in short-termism, aren't we?
Yeah.
Actually, have you seen tech coming in and changing stuff now in terms of buying a home and the house buying process, and in your business in Skipton generally? Is that finally coming to the fore?
I think yes, actually. I think we are starting to see that. I think there's been a lot of tech advancements done to try and get people's offers as fast as we humanly possibly can. And which is fantastic and brilliant, and we need to continue to build on that, and understand, when we don't, what is it that's blocking that? Surely there's a way to do that. So I think we've got certainty up front in the process, but that we know that the real crux is getting your keys. Yeah. So in fact, it's got worse, hasn't it? Actually, I think the actual time from it's gone worse. But we are starting to see some improvements and enhancements. And one of the things that we're doing within the group is a pilot through LMS. So we're starting to collate more data up front on initial listing with vendors that we can then start to utilise to try and make it all speed up, so that you're almost unearthing any kind of blockers or worry points, etc., from the get-go. And that is having positive results, but we need that on mass scale everywhere, don't we? Yeah. I think we're starting to see it, but it's been a long time coming.
I know.
And it costs, billions.
And then you've got AI coming in.
AI.
Which might change everything.
Yes.
It's like this.
You pull a face there. Is that?
Yeah, we should do a whole podcast on this. We probably will. But I almost don't want to get into it now. Because it's like the wild dog in the industry now. You don't know. It could be a force for good. It could also be a force for bad, and it's sort of out of the box and just running around everywhere, and everyone's trying to tame it.
Yeah, it's an interesting one. I mean, we're using we won't go into a lot of detail, but we're using AI to support our colleagues. Yeah. So from an internal lens, which is being able to answer customer queries more rapidly, because they can access the information, and it's learning around, that wasn't the best response I gave you last time, so I'm going to tailor that, and so then colleagues are able to provide better support up front. But there is a bit of,
I know There's a bit of wildness about it.
Yeah.
So, what advice would you give to borrowers wanting to buy and maximise their borrowing capacity?
Oh, what advice? There's lots of advice. Well, first of all, what would I say? Say, go and speak to a broker. Get some advice.
There you go.
You always want advice.
Yeah.
It always makes me smile when we get advice from people that have absolutely no idea what's the right thing. You know, going, just ask my dad. No, please don't do that. Please don't do that. Unless they are qualified to provide.
Qualified mortgage bank,
yeah.
My kids would never ask me anyway.
No, they'll ask AI.
Yeah, they'll ask AI. Yeah.
Always seek advice. Get yourself in the best possible position as you can. So start savings habits as early as you can. They all add up, don't they? They all compound. So that don't, even if you can't save the amounts that you'd like to be doing, get into that habit as early as possible. Make sure that you've got your credit file in as good a position as possible as well. It's always interesting. People always say, it's good to have a little bit of debt and show that you're paying it off, which is fine. But you don't want to have debt and then loads of utilisation against that. So, you've got to be careful about making sure that, you're visible in terms of a credit file and that it's as clean as possible. Do your research around realistic on what is it going to cost. So, what deposit do you need? How long do you think you're going to be able to save for that? What's the cost then of servicing that debt?
Yeah.
Are you happy with that, or would you make a different decision?
Good old fashioned budget planner.
I know, and you can't always have everything. I mean, I'm doing this at the minute, so I've decided I want to move.
Right. Okay.
It's like, but I kind of do want everything, but I can't quite have everything, as my husband keeps telling me. So, what am I going to compromise on or not? Non-negotiables, and things around how long do you want to be there?
Yeah.
So,
absolutely.
Is this a 2-3 year move? Is it a 7-8 year? Is it you on your own, you with children? What are the life circumstances going to be? Because what you don't want to do is have all the expense of buying and then think, that was only fit for purpose for 12 months and I want to do something different now.
I get that.
Forearmed with as much information as possible.
So I know we're running out of time, but what are two of your non-negotiables?
On my property? So
just being nosy, really. I'm just interested.
A peek into Charlotte's window. So I need a bigger garden for my little girl. Yeah. So this is what's instigated me moving house.
Okay.
Can I have a trampoline?
Yeah. Very important.
The answer was no.
And they want a big
because I don't want to look at it
as well.
Yeah. Well, I'm not sure about that, but so a garden that can accommodate a trampoline, as we all want one that I don't have to look at. And I want open plan kitchen, living, dining room, because we've created that at home. And much to my husband's dismay, after only 2 years later, I've said, trampoline now. She's 5.
So it was a trampoline that did it.
It's a trampoline. I know.
No, I get that. I get that. That was something my daughter wanted.
Yeah.
And
they are an eyesore, though, aren't they?
They are an eyesore, but
it needs to be hidden around a corner somewhere.
They do give hours of entertainment for free.
And joy.
And yeah.
I've got to bring joy. What else have I got to do for
definitely.
her? Yeah.
So, what was the best piece of advice you've ever received? So I'm asking all my guests that because I'm trying to compile that.
I think one that's stuck with me is how do I build my equity in the bank with others?
Ooh.
And not to underestimate the power of that.
Right. That's interesting.
Do not underestimate it. It can be massively powerful. And it's something that I think in very busy lives, not unintended, that we can sometimes miss. And it can be small things that do it. But it can be very, very powerful.
Very good. I love that. Well, thank you very much, Charlotte.
Thank you.
I've really enjoyed that. I've got a lot out of it. It goes fast, doesn't it?
It does go fast,
when you're just chilling on the couch.
Yeah, it's nice.
Thank you very much, everyone, for watching. And join me again to find out who next time is going to be on the Coreco Couch.